Trading Tip Tuesday here at BNC. That means it's time to talk about some indicators. Wanted to take a look at the SAR or Parabolic SAR today. Now, full disclosure, I've really never used this. I don't see many people who use this, but it's something I've never talked about. And there may be somebody out there who finds the SAR useful for their trading methods. SAR stands for stop and reverse. It is not really useful in a ranging market. It's more of a trending market indicator. Like it says, it attempts to give an edge by highlighting direction, providing exit and entry points. I'll give some examples on how you could use this on the crypto charts, and you can read the Investopedia article sort of discussing what it is. But I can see adding this to sort of a high time frame overlook, broad strokes. What are we doing here in the market type deal? Are we bullish or bearish? Because what I'd love to see on backtesting, for instance, in 2014, this is the BTC chart on the weekly. The dots here is the SAR, and you can see dots above or below most of everything in 2013, 2014, definitely 2018, definitely 2020, definitely 2019. So on backtesting, when trending is extremely strong, when the trends are strong, this thing is great, right? Because it tells you on its own really where it thinks the market's going. And these dots will flip depending on support resistance flips. This is very similar to Spider Crusher, if you're familiar with that. It's an older indicator package that I don't really see getting too much attention these days, but very similar concepts to Parabolic SAR in Spider Crusher. And we can see most recently when this flipped from bull to bear in that May 18th down spike. But for the most part, it's kind of done extremely well in heavy trends. Even when this is minimally sideways in 2016 and 2017, it'll flip back and forth, but you can still treat that as entries, exits, stop losses. You can use all of those levels, all of those flippings back and forth as entries or exits. So for example, leading into that March Corona low, we go from bull to bear as we're below the dots to bull again in, say, April, May, right? And then we stayed bull the entire time until mid-2021, flipped back and forth, right? And you can follow this and use it for allocation, use it for sentiment indicators, just a sanity check. Are we above or below the Parabolic SAR on the weekly, right? For anything. ETH, very similar. We had that flip in May 2018, and you know where the dots are as far as where they're going to flip based on how they print for the current week. So this, according to the SAR, we're not bullish on the weekly until we're above 3,700. So this will continue to lower, right, as weeks go on, kind of indicating how strong bearishness needs to be over an extended period of time, right? Because it starts at the highest high or lowest low and then just creeps up or lower over time. So this is another way to say you need to get continuous lower lows here in order to be bearish, and you need to get continuous higher lows in order to be bullish. So ETH, it's saying this either needs a lot of time or it can quickly get above 37.38 to be bullish again, right? So it's kind of telling you odds as well as far as strength of trend. This can be bearish all the way up to 37 in the near term on the weekly before it flips, right? Another way of saying that is, are we making higher highs or higher lows here for trend continuation or not? Now you can add stuff to this like the 20-week SMA, which historically has been an excellent gauge trying to tell you what's going on. So the SAR paired with the 20-week is both telling you, we're below the 20-week and we're below the SAR, right? You can keep adding stuff to this. What does the weekly cloud tell you? What do pivots tell you? What do the daily 5200 tell you? What does the daily 1050 tell you, right? You can add all these things to your list of checks for how bullish or bearish are we. And this process, at least, is what I use for the Enzyme stuff on the ETH-BTC side of things when I'm looking at technicals collectively. Are we above or below the cloud? Are we above or below the 200? Are we above or below the 20-week SMA? And then you can adjust your allocations accordingly. You can adjust your expectations as well. But your mins and maxes, right? If if I have 10 things in my checklist and only 3% of them, only 3 out of the 10 of them are bullish, then I shouldn't go beyond my 30% allocation unless there's some extenuating circumstances like a chart pattern or something else, right? You can always have outliers in your system, but if on backtesting this stuff works, why would you deviate from those 5 to 10 things that you're looking at on a day-to-day, week-to-week basis? And SAR is one of those things you can add. It's based on math. It's not biased, right? It prints ahead of time, really. BNB the same on the weekly, right? All this stuff kind of looks the same right now, so all of it's going to look the same. But it catches BNB in October. It catches ETH in October. It catches BTC since April, right? BTC held that entire way up. So again, you can either treat that as a stop loss or a trailing stop or a get ready, get set, go type of situation where it flips 1, 2, or 3 dots. It's up to you how you want to look at this. But Ripple, even how noisy it's been on the weekly, has given you somewhat of a signal as far as where it thinks the stops are on the highs and the lows, right? On the daily, it's a little less convincing to me because the subjectivity kicks in when you're asking yourself, okay, I know where my trailing stops should be, right? If I'm long on the 1 hour or 4 hour, here's a great example of something you can use if you're trading on low time frames. If I'm long or short on the 1 hour or 4 hour, I can use extremely high time frame stops as a high signal to noise ratio versus using lower time frame stops. So if I'm long on the 4 hour or the 8 hour, or like I was and still am long personally on BTC and a little bit on Enzyme, I can be looking at the daily and saying, all right, we flipped that support at 31. I was saying if we break 30, it's kind of a duh moment for, all right, this thing's in trouble. Even if you don't know chart patterns, you don't know trends, you can just look at the Parabolic SAR and say, all right, we're holding this SAR for kind of 2 months almost. Now we just broke it over the past 3 days, and the top side is all the way up at 35, right? So that does not look bullish in the near term on the daily. And this says if you were long, you should be out of that as of 1 or 2 days ago. And this won't reflip in the near term until it's above 35. As far as trend stuff is concerned, I still prefer the alligator fractal, which is similar in that it gives you sort of breakpoints, entries, stop loss, exit. You can see we've been bearish based on MAs all the way down from 55 and are still bearish, but it gives you those entry points, right? And you can use the SAR for entries as well. You can say, all right, we're bullish until we're below the SAR on the daily, and we broke below that, so there's your short entry, right? That day would be your short entry, very much like fractals, bear fractals on the Williams alligator and Williams fractal stuff. Once we breach a fractal here, that says it's time to add to your short. It says the trend is short because the MAs are bearish, and then add to your short on any fractal breach below that. Even with Doge, again, you can add stuff to this. I don't think alone you can really use it for trading. I can't imagine trying to use this successfully. I think it's a little too noisy. But when you're looking for high confidence levels to break, right? Like for example here, if I'm looking at this falling wedge, flag, whatever you want to call it, right? This gives you a level to the upside where it's probably a point of no return based on Parabolic SAR, where anything above that is a decent entry, right? If you're trying to avoid fake outs, if you're a breakout trader who's been unsuccessful recently or ever, right? You can use the SAR as a higher confidence interval, similar to Bollinger Bands, where it's telling you, all right, we're moving well past some mathematical level based on the previous candles. And so here, paired with the 200-day moving average for Doge, it's below the 200-day and below the SAR, and probably won't be bullish again until it's above both, right? That's another way of looking at this. And even on the daily up here, it's been noisy, largely because it's been ranging back and forth. Wicks will flip this as well, which is another thing to kind of watch out for. Wicks up or down point to strength or weakness. But here, for example, it flipped this from support to resistance. So it's certainly declining. It's making lower lows. I get that. But it isn't, as bearish as it may seem based on the SAR if you're reading into it a certain way, which is, again, there's that subjectivity creeping in. You have to decide how bullish or bearish this is kind of based on other factors while using this as either kind of a stop limit entry or a trailing stop for shorts, longs, that sort of thing. So difficult to use on its own. Again, I keep saying this, much easier to use with other things. Here's the Bollinger Band thing on Bitcoin on the daily. And over the past month, we'd been watching this squeeze on the Bollinger Bands. Bollinger Bands will squeeze when volatility contracts, expand when volatility expands. And if we're consolidating below the 20 SMA, which is this red line, as volatility contracts, it predicts a move to the downside. So for me, Bollinger Bands did accurately predict a move to the downside here. And the Parabolic SAR is today confirming, as we're breaking that support, that yeah, this is probably real. There's a thing with Bollinger Bands called a head fake, or at least that's what John Bollinger calls it, in that we go one direction before we go the other direction. It's kind of like a fake out breakout situation. But you can use stuff like the SAR to say, okay, this started to look like a breakdown a couple days ago, and now it's not only breaking further below the bands, but we're breaking below the Parabolic SAR. And this Parabolic SAR won't flip bullish again until it's above 34, 35. So it gives you increasing confidence that moves are happening in one direction or the other. BNB, very similar, flipped from bullish to bearish today, or over the past couple days. So I wouldn't use this on altcoins with wicks that are kind of all over the place. You kind of have to use this on something with liquidity, unless you adjust the settings. I don't hate the SAR, and then don't really know anybody who uses it, honestly. But I think knowing about it is more important than not knowing about it. That's why I wanted to do a video on it. If you used the SAR in any way, let me know in the comments below. Let me know if I butchered some explanation or some trading method. But it is a thing that exists, that is out there, that people can use for trailing stop losses, because I get that question a lot. What can I use for a trailing stop loss? Here's another example of that perfectly here, right? You get some consolidation breaks up, SAR flips, you're long all the way up. SAR flips bearish, you're out, right? I can see this being useful for high leverage, especially because it's extremely quick, extremely reactive to price as things get toppy or bottomy, because it'll flip sooner, right? It'll be one of the quickest things to flip one way or the other. You do get more noise that way, but it does save you on high leverage, especially in that position if you're long or short, one way or the other. Lastly, I'll just mention the ETH-BTC fund. I trade for Techemy Capital, as well as the DeFi portfolio on Enzyme.finance, non-custodial portfolio management tool where you can send ETH or USDC into the smart contract, allowing me to effectively copy trade those funds or just watch what I'm doing. Completely transparent AUM, allocations, performance, all the trades I make done through DEXs, all of the yield and lending, and fun stuff I can do through Enzyme. They recently added Yearn vaults, and they're continuing to add more and more stuff, but that gives me, as the sort of manager of the smart contract, options for stablecoins, options for where I want to put that yield, where I want to park those stablecoins based on the yield. Allows me to move it around in a frictionless manner, so that's really interesting from a management perspective. And the DeFi portfolio, we started on April 9th, hasn't done well. The DeFi markets haven't done well since April. A lot of this stuff currently is in some sort of yield play, and ideally, this doesn't make lower lows or continues to make lower lows in the altcoin DeFi land. And that's why this is currently sitting at 75.25 or thereabouts as far as being deployed into all of these alt DeFi opportunities, let's say. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.